Hello traders, welcome back to the channel. It has been probably around 2 weeks since the last upload, and what that usually means is I've been actively trading, but this time that is not the case. So a lot of times when I'm trading a lot, I have loads of content to post for you guys, but this time wasn't really trading much, been busy with other stuff, and obviously coming into December, the markets are notoriously slow. So I'm just going to go through how I traded in December, profit I made last week. I only entered one trade, but I'm going to go through the analytics, going to go through the trade I actually took and how I actually approach trading in December. So you'll see a lot of traders that either don't trade in December, kind of the same with August as well. They are usually slower months. This is a point where you can either, if you're a full-time trader, simply just take a little break or just carry on trading. During these times, there's obviously going to be price movements. The markets don't just completely stop. There's going to be movements. You can catch trades, even this trade, I'm not even sure if I even took it in December. Let me just check. No, it's actually the end of November. But even last year I still traded, but the profit I make is usually, half, less than half compared to like a normal month. Let's say like a September and October, just from what my personal testing has actually found. Even last year, I think I averaged like 10 to 15% a month last year, but then December was actually only 7%. So it's kind of like, you're making less profit, even when risking the same amount. So, based on what I've observed previously, that's what I found with my personal trading. So, going to take that into account going into this month. So I'm kind of just easing out trading until Christmas is over, and then boom, January, we're back on it, making some more profit for 2023. But the trade I actually took last week was actually, if we look on the calendar, it was the 29th. So it was last Tuesday. And, I don't really trade Mondays. That's why I'm not really looking at the charts. If we look at it now, today, not really interested in trading. You can trade Mondays, but what I found is it just doesn't really work best for my own strategy. So I just don't really include it with my trading. But if we go back to the 29th, you guys can see here that this was the trade we actually took. Usually would just target, this area down here or even the low of this wick. But because I mentioned before in a video, I did some testing and I entered trades based off flat, risk to reward levels. So like a 1 to 3, a 1 to 4, a 1 to 5. And I found that 1 to 4 is kind of like the max it can hit before then it is likely to reverse to either my entry or to my stop loss. And this was absolutely perfect in this case. We could have targeted a 1 to 5, wouldn't have hit, and then it would have reversed to the stop loss. Whereas, like I said in the previous video, tested it out 1 to 4, that's where it pretty much reached and then reversed, slightly further, but that doesn't really matter. You got a 1 to 4 and then price reversed, and we got into this trade at around 3.15. And like I said in the previous video, I trade GBP USD in London session and gold in New York session. So that's why, I technically you could have got in the trade here, but I wasn't interested in looking at gold in, at this time when it was actually in this area. I was obviously looking to sell from this area, just based on previous stuff with my strategy. But when price actually came into this area for the first time, it was in London session, so I wasn't interested in trading. So all I did was I set a limit just below. I always set a limit just below and one exactly on the level. So it's kind of like when price is coming into the level, boom, my phone goes off. Or if I'm on my PC, on my Mac, you get a notification, there's loud squeaky noises for the trading view notification saying, okay, price is near your entry. And you can kind of rename them too. And you can say like near the entry or approaching the entry. So you can look at your phone and instead of just saying XAUUSD crossing 1756.7, it then instead says it is approaching your entry. So you kind of know then, okay, it's time to look at the charts. Because often I've had like old limits or alerts set and then it just goes off randomly. I think, oh, it's trade ready, perfect. You go on the charts and it's an alert from like 3 weeks ago, which price has actually finally come back to. So what I did was I set an alert in this area, then price came up, and then I pretty much just set limits. Even if price is just here, just before it taps into the entry, I'll just set a limit, because I think a lot of times people either get a worse entry or they just don't enter the trade because they're sat there. And if I just show you this quick, if you're actually entering a trade, you see this red and blue lines here. People see that going up and down, and they see it drop really quick or go up really quick if they're trying to sell, and they just don't get in the trade. So there is a lot of human error which can actually happen with, you know, manually entering your trades. And also price could just slip a tiny bit, especially with gold, and you could lose like a quarter or even half your risk to reward depending on your stop loss size. But for this trade I actually used a 20 pip stop loss, and the reason for that was I usually use 20-25 pip stop losses on gold, but we had this wick here, and I knew that if we, you know, cleared this wick, then we could potentially go to the upside to this high up here, which is what we pretty much did, and then dropped. But I kind of wanted to see a drop first in this New York session before we actually got that push to the upside. That's why my stop loss was above that area, you know, just in case if it goes above, I'm out of the trade. Simple as that. I'm not looking to trade short positions at that point. And then price pretty much, you know, tapped in and then just dropped straight away. That's kind of the best sort of trade you want, especially if you're like a beginner trader. The less time you're in drawdown, or the less time price is hovering around your entry, the less kind of mistakes you can make. You could move your stop loss to break even too easily or too quickly if you just see one slight pullback against your trading direction. Or you could just close out early when you think, okay, it's hovering around, should I even get in this trade, or should I just close out this trade early and just wait for another entry? Then it just hit the take profit. As you see here, this is when you've got to remain nice and calm. Price was hovering around the take profit for, you know, almost, well, pretty much 2 hours, just, you know, going near the take profit. How many pips away was that? If we just do this, you know, 6 pips away, and then all of a sudden it was 30 pips away. So you're kind of going 6 pips to your take profit, 30 pips away, 6 pips, 30 pips. And for a lot of traders, this would actually be quite painful, and they would just close out after a lot of these pullbacks because they think, oh, the trade is no longer valid. It's not going to hit my take profit. I don't want to miss all this profit I'm in. You know, I was up like 7 or 8K or something, and then suddenly I'm up 5K. So it's kind of like you lose a lot, like 2-3 grand just in a little pullback, and it can affect a lot of people. But because I know my strategy, I know that based on my stats, my trades pretty much, if it's a winning trade, will hit a 1 to 4. That's why I was confident in holding out for my take profit. If we actually go on the metrics here, you guys can see the 29th of November, we actually took this trade and we made $7,900. As you see, it's the only trade we've actually taken on this account, you know, 100% win rate, 10 lots, obviously risking $2,000, which is 1%. On your funded accounts, make sure you use proper risk management or you'll just lose the account. Simple as that. You know, what's the point in spending so much time passing the challenge of verification if you're then just going to risk 2, 3, 4% on the funded account and just lose it within 2 trades? That is the most stupid thing ever. You know, once you've actually got the funded account, it could take you a few months to pass. It could take you even a few years to pass. Once you've got it, lower your risk. 0.5% to 1% risk. Simple as that. You know, on these larger accounts, you could even go lower. You think 0.25% risk is risking $500 per trade. If you make a 1 to 3, you're making $1,500. You know, it's a decent amount of money just from simply trading a funded account. But as you see, very, very nice. And obviously we've passed all these stages, and because it isn't a challenge account or a verification account, we don't have minimum trading days, we don't have a profit target. So then I did actually change my profit split day to the 13th, because obviously you can change it with FT mode 3 times and to 2 weeks, which is obviously the smallest amount you can actually do it to. You can obviously change it to like end of January almost, but I don't really want to work that long. I want to make it as quick as possible so I get the payout, and then we move on to the next funded stage or the next funded account, and hopefully make the same amount of profit on that one too. Obviously we get 80% profit splits. It's not too bad. I think it's like $6,500 or something like that. But then you got to convert it, so it's probably like £5,500 from one trade, which, you know, isn't bad at all. And obviously I take the same trades on my own accounts, because why would I not take the same trades? Simple as that. Because if I'm profitable, why not make profit on all of the accounts? Simple. But what we're looking for now is pretty much tomorrow is when we're looking to trade. Even if we go on GU, it's kind of the same sort of thing. Not really much volume, especially as we are just, London session, fairly early into London session. Not really expecting loads of movement on gold or GU. But if you are trading in December, do some testing first and kind of see, out of the last 2 or 3 years, how has my strategy performed in December compared to other months. If, let's say, December's the only month you lose, either lower your risk or don't trade December at all. If it performs better and you trade better in these sort of conditions, then obviously just trade as normal. Or if it's kind of similar, not as much profit, or even pretty much, if it's not terribly losing like compared to other months, just continue trading like normal, and hopefully you can make loads of profit. Hopefully I can make loads of profit if I actually find some trading opportunities. Obviously my strategy works better with trending markets because I enter on those pullbacks once we've had this nice breaks of the structure. Be sure to like, subscribe, and I'll catch you guys in the next video.